All right, welcome everyone. This is Chris Miles here, cash flow expert and the financial advocate for the entrepreneur here. Hey, I'm excited to talk about the subject today because it could not be more timely than it is right now. If you were right at the end of the year here, so I mean, for those of you listening to this could be the last thing you get before you could be either paying thousands of dollars more next year at tax time or saving that much as well. So I tell you, this is so important. And I'll tell you the reason I'm wanting to do this here is one because the person I have on here, Chris Anderson, who I'll introduce in a bit, is awesome, and he's actually somebody that is my personal accountant I've used for several years, for really over a decade, or about a decade, I think, give or take. But secondly, because this is really the last chance. Like, this is it. Like, after this, you're going to go another year and overpay on taxes, which I see happen every single year. All the time, people will say, Chris, I should probably do that. And then they do nothing. And therefore, there's no benefit. There's no result. And again, they're needlessly paying out of pocket thousands of dollars every year, and they shouldn't be. In fact, just yesterday, I had a client that I was working with. We were on the call, and we hadn't talked for months. And so we got back on, and we're talking about things and catching up, and found out, I said, well, hey, how you guys doing on make sure you're doing the things that saved you over $15,000 last year in taxes? And they said, oh, yeah, we've been doing some of that, but, ooh, I think we missed this. Well, hey, how about paying your kids? How about this? How about this? And a lot of these things that they hadn't done. I said, wow, you got 2 weeks. You better get moving. Less than 2 weeks, really. And so we did, and started getting them in the process moving right away. And that could have cost them, in their case, well over $10,000. So this is why we're doing this. Now, introducing Chris here, I want to say here that Chris is awesome. He's been a guy, like I said, worked with for really the last decade. Someone that has done my own taxes and done a great job of that, and has helped a lot of clients that I've worked with over the years too. And so I bring him on because one, he's the authority on this, right? I mean, obviously he's going to tell you what to do, and he keeps it simple. He does it awesome, and that's what I want to do. I want to give you guys as much power-packed information in a short amount of time, so you can get on with your busy Christmas schedule and get working on this so that you can save yourself money. Sound good? How many of you are ready? If you're on the chat, go ahead and tell me if you're ready for this, ready to have Chris on. All right, Lynette says, bring him on. Ready, says Jennifer. All right, good. Okay, without further ado, Chris Anderson, welcome.
Thank you, Chris Miles. I'm really excited to be here. There's not a whole lot of people in the world that are excited about taxes, but I'm one of them. So I hope
you're one of the weird ones, I know.
Catch some of my enthusiasm. One of the weird ones. And not that I'm excited about paying taxes, but I'm excited about connecting with people, especially business owners, and helping them to pay less in taxes. I work with mostly business owners, and I see how hard they work, and I feel like they work hard for their money, they should keep it. And so as we look out there at a business, taxes are probably one of the biggest expenses that any business owner has. And so if we can drop that down, we can really help people to build their business because they're going to have extra cash flow to put back into their business. They're going to have extra money to take home personally so they can improve their quality of life. I picked up a new client this year. He's in his 50s. He's been a business owner for many, many years. And we did some restructuring for him and implemented some strategies, saving him a considerable amount of tax. And he told me the other day that this is the first year he's going into the holiday season and not feeling stressed because he doesn't have to come up with tens of thousands of extra dollars in taxes. We were able to save him enough that he can go in, he can spend what he wants to on the holidays, have money left over, and just feel really good about things. And that's really what I love doing. I love affecting people's quality of life. I love affecting their ability to do the things that they want to do. And through proper tax strategy and things, we can do that. And so today I want to go over just 3 simple things. I want to get into it, get straight to the point. I appreciate your guys' time and being here. I know it's a sacrifice, and so I want to be able to give you something that can really benefit you. And so the first thing that I like to tell my clients, especially business owners, is that one of the wonderful things about being a business owner is we can turn things that we are already spending money on into a tax deduction. These are the best kind of deductions, right? Because you're already going to spend the money one way or another, but if we can write it off, we're now saving taxes. Some of these things you may be familiar with. So with this concept, we're not able to go obviously over everything in our, in our webinar here, but I want you to get the idea of thinking about everything you're doing in your life and how can it apply to your business. And so I've listed a few things here. Your cell phone. Everybody has a cell phone, right? You're going to have a cell phone. You're going to pay for it every month. And so as a business owner, I don't know any business owner that doesn't use their cell phone as part of their business. And in recent years, as these, as things go through audits and tax courts and things like that, the cell phones are pretty much not challenged anymore as a write-off, as a deduction, because everybody uses them for business. Do you talk to your spouse and your kids and some friends sometimes on your cell phone? Yes, but the cell phones are so integrated into being a business owner now that it's viewed as a necessary expense. Mileage or auto expense. I love this because, we've got our obvious, if I go see a client or, if I go, drop something off at the post office or the bank, deposit for my business account, some of those things are very obviously mileage related to business and tax deductible. But I want you guys to start thinking about everywhere you go. Okay, so if you go to Walmart and you need to pick up some paper, printer cartridges or something for your office, but you're also going to pick up some, you would pick up some personal items. Well, you need to go to Walmart to pick up those office supplies. If you happen to get some personal things, fine, but it's necessary for your business to go pick up those office supplies. And so now you can write off the deduction between, going to Walmart and getting those things. And so just everywhere you go, I want you to start thinking about, okay, am I going to do something for my business? And maybe you add something extra. So if you're going to go to the post office and mail off some Christmas cards this year, do you also need to mail something for your business? Well, go mail it for your business. Okay, yeah, throw your Christmas cards in the mail too. But now you're, okay, I had to go to the post office to mail that off so I can write those deductions off. So just really start everything in your life, and you'll start to find, oh my gosh, I am doing a lot more for my business than I'm realizing. A home office. I get asked, it's so funny because I get asked the question all the time, is a home office a red flag for your business? Absolutely not. I don't know any business owner that doesn't do some sort of administrative work at home, whether it's doing emails, if it's working on their books, whatever it is. Almost every business owner that I know will do some sort of work at a home office. And so because of that, we can write off, parts of our home. There's actually several different kinds of strategies with the home office that we won't be able to get into today, but just know that you can use part of your home as a deduction. If you pay a mortgage, you got your mortgage interest, your property taxes, you got your homeowner's insurance, your utilities. If you're renting a home, you can write off part of your rent. These are things you're going to pay for anyway, so let's make them tax deductible. And as having a home office, wherever you go from your home office, if it's related to business, is going to be tax deductible. Even if you have a separate office building that you go to, if you have a home office and you do work in your home office, then you drive to your other location, miles between two offices is deductible. And so a home office can really provide a lot of additional deductions that you're already spending money on. You're already going to drive from your house to your commercial office space. You're already going to pay utilities. You're already going to pay for these things. So again, I want you to get this concept, okay, what am I already paying for that I can deduct? Those are the best kind of deduction. Travel is one of my favorites because we all go on certain trips. And so I've got a picture up here of an island. And so whatever kind of business we're in, it's going to be a little bit different. I'll give you an example of a realtor that I know that he used travel as a deduction in a fantastic way. And so this was years ago, but he was a realtor and he also was investing in real estate. What's great about real estate is it's everywhere, no matter where you go. And he loved Alaska, and fish. And so he did some research beforehand. He found a property that was right on a river that he loves to fish on. And the property is for sale. And so he called up the realtor that was listing the property, said, hey, I'm going to be in Alaska. I want to check out this property. And so when he got up there, he went, met with the realtor, went to the property, spent the whole week fishing on the property. When he got back, he brought back with him huge salmon, halibut. I mean, he just had a great time, caught a lot of fish. It was awesome. When he got back, he actually even made an offer on the property. He made a lowball offer, but he made an offer. The homeowners rejected it, but he showed that he had an intent before he left to look at the property. He spent time on the property, and then he followed up after he went back home. And so now this trip that he really just wanted to go fishing, he did some business that allowed him to write off the trip. So airline tickets, hotel stay, he was able to write off these expenses. It was a trip he was going on anyways. And so he made some effort to make the trip tax deductible. So my clients, when they're going to go on a trip, if they need some help, I always encourage them, hey, just call me up. We'll talk through the scenario, see what we got to do to make this trip tax deductible. There's going to be some times when you say, hey, I just want to go sit on the beach and not think about business at all. That's fine. We're not going to write off those trips. But if you're open and wanting to make it deductible, there are ways to do it. And so here's just a few examples of, okay, I'm going to turn things that I'm already spending money on into a tax deduction, the best kind of deductions possible.
Awesome stuff.
And so just
I actually call those Biz
keep that in
Cases.
mind. You call them what?
I call them Biz Case.
Absolutely. And real estate is, like I said, it's everywhere. So real estate's a real easy one. Whatever profession you are, there's people everywhere. I have just a real quick example. This wasn't a client of mine, but it's a true story. He was a roofer, and so he decided, all right, we are going to check out European roofing, and we're going to see if it makes sense to bring that style, to the U.S., and provide that in their company. And he even went a step further. I know, Chris, you've talked a lot about paying kids, and this is another example of how you can do that. His kids were teenage age, and so he gave his wife and his kids an assignment for a specific type of roofing that they need to investigate that type of roofing. They flew all over there. They investigated it. Everyone wrote up just a one-page report on the roofing and what they found out. They get back to the U.S. and they say, you know what, this is awesome, but it's just not financially viable right now for my business, maybe later on. So they didn't actually implement European roofing, but because they thought beforehand, okay, I'm going to go over there, I'm going to check this out. They followed up with writing reports and evaluating and making a decision. They're now able to write off their expenses there as well as for the rest of his family because they were an intricate part in evaluating that roofing. Did they do something there in Europe? Yes, of course they did. And so, a bizcation. I love that term. So just keep thinking of things, as you're going throughout, whatever you're doing, okay, how can this apply to business? So I really want you to hold on to that concept and really digest that. The next thing that I really love to talk to my business owner clients is we need to funnel your money. Okay, so what does that mean? What I love is to be able to have my dollars taxed at a lesser rate, but still be able to have full access to it and not to hinder my cash flow. And so as a business owner, we have the ability to do that. The two most common ways I'll talk about briefly today, and the S corporation, and most business owners are familiar with this, but not all. I still talk to people all the time. The client that I just told you about, that we saved a lot of money, he'd been in business 20 plus years and was never an S corporation. So, at any level you can learn more about this. But as a business owner, we are concerned about 4 types of taxes. You got your federal income tax, your state income tax, your Social Security, and your Medicare. Now, your Social Security and your Medicare together is 15.3%, and then your income tax is whatever tax rate you're at. And so with Social Security and Medicare, I mean, right off the bat, 15% taxes is just horrendous. I mean, that's a lot of money. What an S Corp can do is it allows us to eliminate a very large portion of that Social Security and Medicare tax. And so on a large portion of your profits, you now get to keep an additional 15%. How great is that? You can run your money through an S Corp. You're not paying for anything extra. You're just funneling the money to the S Corp, and you're going to save on a large portion of your profit 15% tax. And so that's the, one example, the most common. Some of you probably are already doing that. If you're not, definitely think about it. And you can actually set up an S corporation and incorporate the entire year before the end of the year. And so if you're not a corporation yet, you've got 2 weeks left that you can potentially still get that set up and still save that 15%. So a good action item if you need to do that.
So what are some examples of people who have done that before?
Oh, go ahead. What's that, Chris?
I was just asking, what are some examples of people you've known that's done that before, that's been able to save that 15%?
I have a new client that I just talked to last week, and she's in the network marketing business. Hasn't set up an S corporation. No one's ever talked to her about it, and so we got it set up, included the whole year, and she saved $6,000 in taxes just by doing that one thing.
Sweet.
The guy that I was talking about earlier, the guy that I was talking about earlier, we saved him $18,000. We got him set up in the summer.
And that's every year, right?
It's a significant amount. Every year, yeah, every year. I mean, it'll fluctuate because the savings works off of a percentage. But it's, for his business, yeah, it's going to be $18,000 every single year.
Awesome.
And so, and then this girl that's in network marketing, I mean, she's really growing her business. So it'll be $6,000 this year, and we're forecasting that the savings will continue to grow every single year. And so yeah, that's a great point that this is a perpetual strategy.
Sweet.
Just think about what could you do with an extra $6,000? What could you do for your business? I had one client. Yeah, exactly. I had one client. We restructured him. He saved $3,000 a year. It wasn't a ton of money, but for him, he said, "Hey, that's another vacation I can go on." He wanted that extra vacation, improve his quality of life, spend that extra time with his family. Can't complain about that. So another way to funnel money is through a C Corp. Now, typically, C corporations, unless used correctly, you can enter into some double taxation. I mean, it sucks getting taxed once. Who wants to get taxed twice, right? So typically won't recommend a C corporation as a person's main business, but there is a strategy that if you're in a higher tax bracket, especially 33 to the 39.5% tax bracket, we can introduce a C corp as part of your overall strategy, and C corporations for their initial profits are taxed at 15 to 25%. And so we can funnel money through a C corporation and save the difference, between the 15 and the 39.5. So there's a lot of intricacies with that, but I wanted to, just really get across that there are strategies where we can funnel money but still be able to access our cash, not impede our cash flow, not buy things that we don't need, which we'll get into here in a minute. But really, I'm the type of guy, I like my cake and I want to eat it too. I want to get taxed less but still do the things that I want, have the cash flow that I need to, operate my business and live my life the way that I want to. And so the last point that I want to give across is don't spend $1 to save $0.25. I get asked all the time, and Chris, you might get asked this too, towards the end of the year, clients are asking, well, should I buy a new vehicle? Should I buy a new car, a new computer? Should I buy some equipment? Well, do you need it? Is it going to benefit your business? Are you going to do it anyways? Going back to the first point, turning things you're already going to do into a tax deduction. If they don't need it, if they're not wanting it, if the only sole reason that they're thinking about buying something is for a tax deduction, then I recommend not doing it, because paying the tax is cheaper than buying something you don't need. If you pay the tax, you may be out 25 cents, but if you buy something you don't need, you're out $1, and now you have something that you're not going to use. And so we really want to focus on that first point of changing things that we already spend money on into a deduction. Second point, we want to funnel money in a way that's going to still give us the cash availability, but we're taxed lower. And then don't spend money just for the sake of a tax deduction. If you're going to do it, great, let's make it tax deductible, but you're going to be money ahead by not buying something you don't need.
So Chris,
And so,
Jeremy was asking here on the chat box. She said, "What can a business owner do if we have a lot of cash left at the end of the year and we don't want to get taxed on it?" And maybe Jeremy can maybe further expound on that, what she means, because I know you said a few things just now, but can you give some more examples of that?
Sure. So evaluate your business and figure out what are some things that you're already going to spend money on, especially into January and February, the beginning of the year. You're already going to spend money on it. You can prepay for those things, buy some extra supplies. There's two limitations, unfortunately. You can't prepay rent and expenses. You can't pay like 3 months of rent and deduct it all. And you can't prepay insurance and deduct it all. But other than that, what is in your business that you can prepay? Utilities, just go through and you can use that to drown out your account. I've had some clients, if they've got employees and their payday is normally, it's going to fall on January 2nd, pay them December 31st. And so the best thing is to spend that money on what you're already going to pay for, so that you don't end up just spending the money. Again, if you just spend it on something you don't need, you're out more money than you're saving. And so yes, it stinks. You don't want to pay that tax if you don't have to. It's worse losing the whole dollar. Does that make sense?
Yeah, absolutely. Well, I know I get a lot of people ask that question too, and I've had a few people where they're saying, okay, what do I spend it on? And I agree with you. It's got to be productive. It's got to be something that ideally leads to either one, you're going to spend it anyways, or two, lead to more money. And so I had a few people where they were looking at getting into the end of the year with just coaching with me, and because I address a lot of business items along with their personal money stuff, we talk about that, and we say, you know what, hey, you're probably going to get right off with this anyways. Might as well do it before the end of the year and get the write off really quick and let it go. And so as long as it's going to be productive, I mean, those are for people that it's like a no-brainer.
Okay.
If it's somebody that it would be a total waste, we wouldn't even suggest the idea because it's just not worth it.
Exactly. Yeah, you're exactly right. Great example. Some professional development, you are consulting. If you know you're going to go on a trip in the summer, buy your tickets now. If you're going to hire a web guy to redo your website, pay him now. Things that you're going to be paying for. Yeah, even if, I said in the first part of the year, but even 6 months down the road, you're going to have the expense. It's going to improve your business. Pay for it now. But don't go buy a car if you only need a car because you want a tax deduction. If you want
Right.
the car, let's make it tax deductible. But don't do it just for the sake of a deduction.
Awesome. Great question, Jeremy. Appreciate that. So, Chris, tell us, what are some ways that people
Add
can...
any more?
Sorry, go ahead, Chris. Go ahead.
Oh, no, you're fine. I just didn't know. You asked Jeremy if she'd add a little more clarification to the question. I don't know if she did or not. But
No, I think you answered it then.
cool.
Awesome.
So you were going to ask
This,
me.
yeah, I don't know if there's any more questions on here or not. If there are, great. But if not, I know, we're trying to wrap this up with about a half hour anyways. So which we definitely did. This is great. Appreciate this. This is great stuff, Chris.
Awesome. If anybody's interested or needing to talk more specifically about their personal situation, I never charge for an initial consultation. You're welcome to call me or email me, and we can talk through what you've got going on, especially if you need to do something before the end of the year. And if I'm not available, I've got a team of accountants that we can make sure you get connected with and get any specific questions to your situation answered and make sure you're taken care of.
And just a bit further clarify on that too, be sure that you do not wait until December 30th to ask questions. Worst time ever. Creates stress for everybody, including Chris, and he might hate you for it. So do not do that. If you got questions, you got things you want to do, the important thing is you do it right now. It's got to be done right away. Even the timing of doing this webinar is so to the wire that there's no way you can afford to wait any longer. So, well, great, Chris. This is awesome. I really appreciate you taking the time to do this. This is fantastic information and everything else. So there's another question that came through. Jennifer, what I'm going to do is I'm going to suggest you reach out to Chris, just with what you see there. Any questions you guys have, definitely reach out to him and find out. Get your questions answered as quickly as you can, preferably before Christmas, because Chris does like to enjoy Christmas. So, anyways, have a great and prosperous, wonderful Christmas, holiday season, and New Year. And everyone, we will talk to you later. Thanks so much.